Let's start the breakdown for EU. I think we have previously seen the breakdown of DXY, which we say that it is correlated negatively with EU. So whatever we expected to see in DXY, we are going actually to reverse it, and that's probably what you're going to expect in EU, because if DXY is bullish, the EU is supposed to be bearish, and if EU is bearish, DXY is supposed to be bullish, and vice versa. Now, let's dive deeply now into this. This is in the 3 months time frame. I want us to do a quick top-down analysis. Let's start from the higher time frame, because you should understand that this smart money, how we call them according to the ICT language, the smart money, actually, let me call the participants that are behind the movement of the candlesticks, the one who decide which candlestick to move at what time and what are the price they are booking. The smart money consults mostly the higher time frame for them to make the decisions. They do not mostly consult the lower time frame for them to make the decisions or the investing decisions they want, or even the large institutions like bank. They do not consult this 1 hour, let me say, with the 1 hour in the 15 minutes or the 5 minutes to make the decision. They are mostly glued on the higher time frame. Now, the understanding of a higher time frame is very important, because if you do not understand, then you'll be caught in the noise in the lower time frame. That's why it's so much important for you to understand the higher time frame. So, hands on work. We have been bullish. We have retraced, formed a higher high. We have again retraced. We have formed a higher high. And according to the movement in the 3 months pattern, we have been bullish all through. But now let's look here. In the recent, I think this is from 2008, we have been bearish, really, really bearish. And how are we moving bearish? We were accumulating for some times, accumulating orders. You see, most of the times we say when price moves, it does four things. One, so let me just, why do price move? Why does price move? Now, price moves to fulfill either one of these four things. One is to hunt liquidity. Two is to generate liquidity. Three is to balance inefficiency, balance inefficiencies. Then four, it's to, let me say, rebalance equilibrium. So this here, let me call it rebalance. Sorry, rebalance inefficiency, rebalance equilibrium, generate liquidity, and hunt liquidity. Now, as price, anytime you see price moving, it's either doing one of these four things. As price has been moving to, let's say, rebalance the equilibrium in this, because you can see we have one big push upwards, which was a very great bullish move. What happens? An impulsive move and then a correcting move. We have been correcting as we're doing what? We are rebalancing the equilibrium, and also we are rebalancing the inefficiencies. We're balancing the inefficiencies. Now, price has been moving to rebalance the equilibrium. It has been doing something. It has been accumulating, distributing, accumulating, distributing. And as it accumulates, what does it do? It is generating liquidity, generating liquidity. So there is a lot of liquidity that is resting in the 3 months or in the higher time frame that needs to be targeted, especially by EU when you're looking at the 3 months time frame. Now, something is much more interesting here, because as you see, as price was rebalancing equilibrium, it put in a key low at a very significant price level and also at a very significant time. At this low, there is an SMT between EU and GU. So this means that this is most likely going to be a very great or a very important swing point, as you are looking to put a low here and then target the generated liquidity. So this can create an MMBM or the market maker buy model in the time to come. That is a possibility. We are all talking in terms of probability here. We are not that sure because price can do anything, but there's so much high possibility that price will be moving for these market maker buy models in the 3 months time frame. Now, in fact, there's even more interesting thing. We're having double SMT. The SMT, this swing low that was put in July 2nd, 2022, GU has taken it, but EU failed to take it. So this means that there is a very high possibility for us to use this as the swing low put in the smart money reversal here as you are targeting the buy side liquidity points. Now, let me clear this. So we have the fair value gap, we have deepened, forming the low, and then we accumulated, manipulated, but in the manipulation, we never took this low, it created an SMT, we have distributed. Now, the move we have been seeing of late in the 3 months time mostly has been to do what? Only one of the three things coming to balance this inefficiency. So this is a 3 month fair value gap. So price has been accumulating for a while, and then it has dipped into the 3 month fair value gap. What do I expect to see? I expect to see an IOFD. That means we are going to dip into it. Preferably, prices shouldn't pass the halfway or the midpoint of this fair value gap. And then we put in a low, and then we distribute to target this liquidity that are generated upside here. Let me call them the previous year liquidity point, because these are previous year, uh, because it was made actually in January 18. So this is a previous year high, and it's a very great price point that we will be looking to handle liquidities above it, that are resting above it, which are the buy side liquidities. So I would like to see price moving here, an SMT being created, and then we are pushing in the high side. Let's check if there's an SMT in the higher in this lows that has been created. So it's very evident. Let's see. No, there is no SMT. There is actually an SMT here. Look at this. GU has taken October 2025 low, but EU has taken the October 2025 low, but GU hasn't taken it. So I would like to see, if you were to be bullish, I would like to see this SMT hold, and then we put in a low, and then move bullishly. So let's come to the 1 month. Let's move to the 1 month time frame. I think the 1 month time frame will see it clearly. We have been accumulating. The thing we're doing right now is manipulating. So we are manipulating into the monthly fair value gap and then distributing. So we have already swept the liquidities that were racing below here. Let me mark it well. So this liquidity has been taken away. I think it's August 2025. So it's a previous month's low. We have swept the liquidity. We have created an SMT. Price might still dip coming for this inefficiency here. We might see a continuous bearish price until we reach to this fair value gap here, which is the monthly fair value gap. But also price can hold wherever it is and continue pushing. So if price puts in a low at this moment and we have an SMT, and I see a confirmation for us to be moving bullish, I will be bullish, targeting the higher time frame. So this is what is happening in the monthly. We are having a manipulation. Possibly we can have a distribution. Let's move to the weekly. Now, in the weekly, we have swept. This is okay. We have said this is a previous month's low. We have swept and taken the liquidity. Let's see the SMT divergence at this point. The one I was telling you. If you can clearly see, this is an SMT. This one has taken it out, but GU hasn't really taken it out. There is a possibility for it to hold, or there's a possibility for us to continue seeing price movement. This SMT will only be validated if there's a change in the style of delivery. The SMT for now, it's null and void. It's not yet considered as a potential SMR indicator or potential SMR or smart money reversal. Let me just call it an indicator, because SMT at the end of the day is an indicator. Even if it has been put, it has not yet confirmed that we're actually putting a low until there is a change in the state of delivery. If there is a change in the state of delivery, then we'll confirm that the SMT has been put and we're actually going to move bullish. So from now, this is a manipulation, accumulation here, manipulation. I would like to see a distribution in the time to come. Now, here we are in the daily. And as you can see, the daily has been bearish for quite a long time. We have been the bearish momentum we saw actually in the monthly to rebalance the inefficiency in the monthly is one of the reasons why the daily has been bearish for quite some time. But there's still a possibility for us to be bullish after this bearish move has ended. But we are not bullish at the moment. In as much as the higher time frame is signifying bullish momentum or bullish possibilities, we cannot be bullish in lower time frame unless there is a change in the state of delivery. So we have been so much heavily bearish, and I want to see the bearish momentum continuing until the moment we shall see a bullish signature being put into place. Right now, you can see we have this fair value gap here. This is a daily fair value gap. I would like to see the daily fair value gap holding as we continue moving down. So this means a high has to be put there, and then we continue targeting this sell side liquidity resting below here, and then we continue moving down. But now, what happens if we invalidate this level? If we invalidate this level, I'll be looking as if price wants to rebalance the 50% of this range, because we are having this range here. Price will be seeking to come to the equilibrium, because where does price move? It to rebalance equilibrium. So if we invalidate the fair value gap, let me mark the equilibrium point here. So this is our equilibrium. If by any means we invalidate this fair value gap, I want to see it acts as support now, because it will be an inverted fair value gap targeting the equilibrium. And after targeting the equilibrium, mostly I would like us to see as the next point of interest will be for us to target this breaker block, or this order block. Let me call it a mitigation block, because people were looking to buy here and then it was invalidated, so it's a mitigation block. I'd like to see price come to this mitigation block here. So for now, I'm bearish. I would like to see this one hold. But in any case, if at any moment it goes above this daily fair value gap, then I'll be targeting for price to come into this moment, or into this half of this range, this equilibrium that we have seen, the displacement leg. But now the H1 is quite interesting. The H1 is quite interesting to the point that it can give us kind of a guess of what is possibly going to happen. Because look at this. This is the daily fair value gap we are talking about. We have seen in the daily. But look at this. Coming to the H1, it is so evident that there is a crack in correlation between EU and GU, such that EU has not taken this high, and yet GU has taken the high. So we are having an SMT divergence at this point. There is a crack in correlation. This can signify that there is a possibility of a high to be put at this place for us to continue going down, only if there's a change in the style of delivery. So if we invalidate this fair value gap, this is what I'm looking for now. If we invalidate this fair value gap so that it acts as an inversion, I will be bearish, just put my positions and targeting the sell side liquidity. So the swing traders can actually have a moment here, or they can have a possibility here to continue being bearish, only if we are actually seeing this SMT acting as a significant SMR reversal point. So for now, I'm still observing. I'll be keeping my eyes open. I'll be looking on what price is trying to do at this moment. But if price continues going high and invalidates this, remember this is my target here, equilibrium of the range. So I'll be looking if price can rebalance to the equilibrium.